Hey everyone, welcome back to Corporate Decoder, the place where we decode the mysteries of corporate filings. And today we've got a special meeting announcement from Moleculin Biotech Incorporated that hints at some pretty significant changes. If you are an investor or just curious about what is happening behind the scenes at this company, you'll want to stick around. Be sure to subscribe if you haven't already and join our Discord community linked in the description below for more in-depth discussions and to connect with fellow corporate sleuths. So, what is the big deal? Moleculin Biotech Incorporated is calling a special meeting of its stockholders, scheduled for February 5th, 2026. The main reason for this gathering is to vote on a few key proposals that could really reshape the company. Think of it as a corporate crossroads. First up, and this is a big one, they need stockholder approval for something called the NASDAQ proposal. What this really means is they're seeking the go-ahead to issue a substantial number of new shares, up to 26,108,23 of them. These shares are tied to warrants that were issued back on December 11th, 2025. This is a pretty common requirement when a company issues new shares like this, especially under NASDAQ rules, to make sure shareholders are kept in the loop and have a say. Now, let's dive a bit deeper into why this is happening. On December 9th, 2025, the company entered into some special agreements called inducement letters. Through these, they made deals with holders of existing warrants. What they've essentially done is sweeten the pot for these warrant holders. They've agreed to let them exercise their old warrants at a slightly reduced price. And in exchange, the company is issuing brand new warrants. These new warrants, which they call Series G warrants, are for a much larger block of shares, up to 26,108,23. The catch is, these new warrants are not exercisable yet. They need your vote, the stockholders' vote, to become active. Effectively, this proposal is about unlocking the ability for these new warrants to be exercised. The company is pointing out that NASDAQ listing rule 5635 requires stockholder approval for these kinds of stock issuances, especially when they are not part of a standard public offering. So, they are asking you to vote yes to allow these warrants to be exercised. And what happens if you don't approve this? Well, the company won't get the money. They estimate that if all these new warrants are exercised for cash, they could bring in about $17.31 million. That is a significant amount of money that could fuel their growth or operations. So if you are a voting shareholder, this is something to consider. Now, here is the part that impacts existing shareholders directly: dilution. If these warrants are exercised, the company will issue over 2.6 million new shares. This means your ownership percentage in the company will go down. Think of it like a pie. If more slices are added, each existing slice gets smaller. They are also warning that this could affect the market price of their stock, which is a pretty standard disclosure. Next up is Proposal 2, the name change proposal. This one's pretty straightforward. They want to ditch the biotech from their name and just become Moleculin Inc. The reasoning behind this is that they feel Moleculin alone is a stronger, more recognizable brand. It sounds like they believe the market already sees them as just Moleculin, and they want their official name to match that perception. It is a common move for companies looking to simplify their brand identity or signal a shift in focus. If you vote yes on this, they'll file an official amendment to their founding document, their Certificate of Incorporation, with Delaware. This is the legal step to make the name change official. It is worth noting that the board reserves the right to back out of this name change even if you approve it. They're essentially asking for your permission, but keeping their options open. Don't worry, your rights as a shareholder won't change. You won't need to swap out your stock certificates or anything like that. The only real impact for you is the company's name and its ticker symbol. Oh wait, they actually say the ticker symbol won't change, so primarily it is just the name. And finally, Proposal 3, the adjournment proposal. This is basically a fallback plan. If, on the day of the meeting, they don't have enough votes to pass either the NASDAQ proposal or the name change proposal, they want the option to postpone the meeting. This gives them more time to try and convince shareholders to vote in favor of those proposals. Essentially, they're asking for permission to hit the pause button on the meeting if needed, so they can campaign a little harder for those votes. It is a way to ensure they can get what they need done without having to call another meeting later. Sometimes this is necessary to get proposals over the line, especially if a significant portion of shareholders are undecided. Now, let's quickly look at who owns what. This table shows us who the major players are in terms of share ownership as of December 11th, 2025. Walter V. Klemp, the chairman of the board and CEO, holds a notable amount of shares. He owns over 34,000 shares, representing about 1.3% of the company. When you look at all the directors and executive officers combined, they own over 53,000 shares, which is about 2% of the company. This shows that the leadership team has a vested interest in the company's success, which is generally a good sign. It means their financial interests are aligned with those of other shareholders. Going back to the Nasdaq proposal, this is where the real financial implications lie. Remember those warrants. The initial exercise price is $6.63 per S-share. An interesting detail here is the cashless exercise option. This means that if the company hasn't properly registered the shares for resale, the warrant holders might be able to exercise their warrants without actually paying cash. They essentially turn in their warrant and get shares, and the value of the warrant is used to offset the exercise price. This is a common provision that can protect the warrant holder's ability to actually profit from their investment. The company has committed to filing what is called a resale registration statement by early January 2026, aiming to have it approved by early February. This is crucial because it allows the warrant holders to sell the shares they get after exercising their warrants on the open market without running into legal issues. For this Nasdaq proposal to pass, it needs a majority of the votes cast, excluding abstentions and broken non-votes. This means if you vote, your vote counts directly towards approval or disapproval. The board, as expected, recommends voting for this proposal. Now, for the name change proposal, remember this requires a majority vote of all outstanding shares. This is a slightly higher bar than the Nasdaq proposal because abstentions and broken non-votes will count as no votes. The board also recommends voting for this. And finally, the adjournment proposal. This also needs a majority of votes cast, and again, abstentions and broken non-votes don't count against it. The board recommends voting for this too, which is common for these types of proposals as it gives them flexibility. It is also worth noting that there aren't any appraisal rights for shareholders on these proposals. This means you can't demand to be bought out if you disagree with the decisions. Your only recourse is to vote or abstain. Looking at Moleculin Biotech Incorporated from this filing, it seems like they are in a phase of seeking capital and streamlining their identity. The Nasdaq proposal indicates a willingness to raise funds through warrant exercises, which is a common, albeit dilutive, way for companies to get cash. The name change proposal suggests a rebranding effort, aiming for a simpler, perhaps more modern, corporate image. The adjournment proposal is a standard measure to ensure they can achieve their goals for the meeting. The company's direction seems to be focused on unlocking capital through their existing financial instruments and presenting a cleaner brand image to the market. The risks here are primarily around the dilution from the warrant exercise, which could impact existing shareholders' value, and the market reaction to the name change, which is always a bit of a gamble. However, the potential $17 million in proceeds from the warrants could be crucial for their operational needs or future projects. In conclusion, Moleculin Biotech Incorporated is asking its shareholders to approve measures that will allow for potential capital infusion and a name change. The decision to vote yes on the Nasdaq proposal hinges on whether shareholders believe the immediate capital is worth the dilution. The name change is more about branding. The adjournment is just a procedural vote to give the company flexibility. Alright, that is our breakdown of Moleculin Biotech special meeting filing. What is your take on these proposals and what they signal for the company's future? Do you think the capital raise is worth the dilution? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord in the description for more discussions. Thanks for watching. See you next time.